Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the Dow, S&P, and Nasdaq and how it has made progress since March 2020 Corona crash and how far it has come and what to expect. Most of the Elliott wave experts are looking for a major correction in the coming months. It could be rivaling the March 2020 correction that we had, which was more than 40%. So let us look at what they are talking about and let's see what are the economic conditions in this country as we speak that might be fueling the drop in the stock market that is being predicted. If you follow many of the experts in the Elliott wave industry, many of them are predicting a significant drop in the stock market. Right now, according to them, it is reaching the peak of this correction. And I will show you what they are talking about. And we could see a decline something like this year or next year that could retest the March 2020 lows that we saw. Let me look at this is Dow Jones DIA. Let's look at the SPY, which has a similar pattern, and it went past the March 2020 highs and it has made multiple highs, and it is actually today it is a highest as far as the stock market is concerned. Whereas Nasdaq, represented by QQQ, had about 12% pullback, and it has made a pretty significant progress. These are weekly charts, and in the last 2 weeks, and it could catch up with Dow and S&P in the next couple of weeks. So keeping this in mind, let us get back to some theory and then conclude with what to expect in the coming months or in the next couple of years. Here is the mega wave, all the way from I think it's from the 1930s to 2025. We had this major correction, the 1929 depression. Then we had multiple corrections here, and right now we are again at the top of the wave, where we expect to see. This is at the top of the wave. And we expect to see we already seen part of this correction, and we may be looking for more correction. And here's another chart which is looking at the S&P historic data, all the historic data from 1871 to 2015. The market crash of 1929 marked the end of the first wave, followed by wave 2, and according to this, the wave 3 ended somewhere here in 1997. There was wave 4, and now we are riding the mega wave, wave 5, of which we have completed wave 3, and we are going through the formation of the wave 4. And once the wave 4 is completed, then we're going to be seeing wave 5. That's when Glenn Neely predicts the Dow Jones could hit 100,000 points. I'm just going to show you as how much variations are there by Elliott wave experts in terms of labeling these same waves in so many different ways. So I'm just going to show you a few examples. Then I'm going to conclude with some of the information from the experts like Elliott Wave International or Glenn Neely from NeoWave Elliott Analysis. So here is from Elliott Wave stock market, and they recognize the March 20 bottom, and they are labeling this as 1, 2, 3, 4, and then the final wave of this one. But this is their representation, which is totally different from other people who are making the same predictions. So let's look at this one. This is the Nasdaq. I'll skip this one. And here is another one looking at Dow Jones Industrial from Elliott Wave Plus. These were all taken from the Google Images and from YouTube channels. And here was the 2009 market crash. Then they had this March 2020 market crash recognized here. and they have recognized labeling this as 1, 2, and maybe we haven't even completed 3, and we are somewhere here, and they expect something to drop here by August 2021. So that's what I'm trying to bring your attention to, because this wave after the March 2020 has traveled quite a distance in terms of price and time, and it may be primed for a pullback, which may be part of this correction. Even though some people are reading this as impulsive wave, other people read this as a part of the correction we are seeing here, A, B, C, D. Then we are supposed to see E wave, which may be like an expanding triangle like this, testing 2020 lows. And here's another chart from Elliott Wave Plus, and again, even though he puts this as 1, 2, 3, 4, 5, this is part of their correction, and he expects this one to get close to the March 2020 correction before it makes a headway up. And after that, after wave 5 is completed, again it's going to have to make a correction, so the story continues. So this is what he's predicting, that it may come down to here. So we are not too far off from the downward trend that has been predicted not by just one but by multiple Elliott wave experts. This is for the S&P 500. Here's a March 2020 decline, and they labeled this as 1, 2, 3, 4. We are in the correction. The wave 4 is divided into multiple parts here. I can't even understand what classification they are using. And the wave 5 is supposed to be coming here. This is another one from March. So 1, 2, 3, 4. So the wave calculations are all over the place. So if you look at this analysis, it will be more confusing than ever as to how to interpret these things. But the way I look at it is, there are 5 impulsive waves, there are 3 corrective waves, and there are certain mega trends which we need to be aware of, like the March 2020 massive 40% correction. Whenever you get correction wave A, you need to look at and see, is this A wave A or is this C? Because it could be a reply to a previous A-B correction, and this may be the C wave, in which case you are getting a final 5-wave impulse. But if this is part of a triangular correction, an expanding triangular correction of like A, B, C, D, E, then you're looking at a different picture. It depends on how people interpret it. Anyway, here is Glenn Neely, who has made numerous positive predictions over the past 3 decades, and he reached the top of the wave in 99 as wave 3. And after that, he believes all this thing we are seeing this from 2001 to 2021 are part of the correction to the mega wave 3. So here's wave A, B, and then we have a C, which is like a triangle, like a expanded triangle, which is it's B. We got C, we got waves coming on here, and he also predicts, we had this March 2020 correction, which dropped 40%, and most of it we have recovered here, and he expects this will be the end of the D, and then we expect a E wave which can go past the March 2020 correction. So let's keep that in mind, because several experts have predicted the same outcome. It doesn't matter how they come to this conclusion. As I told you, most people calculated this as like 1, 2, 3, 4 correction. But Glenn Neely look at this as this was the mega wave conclusion of wave 3, and these are the corrections A, B, C, which is a continuation of an extended triangle, and then we have D, which he expects it to be like an expanding triangle, which started with this one A, B, C, which will go past that, then E and F. and then make an upward trend for the final mega wave 5. So that is an interpretation from Glenn Neely's. But let's look at real economic conditions. Are they supporting these kind of speculations that we are going to see a correction in the immediate period, maybe months, perhaps within a year? If that is the case, let's look at it. The labor costs are going to go up. They are already going up. If they set the minimum wage to $15, it's going to cost a lot of jobs. It's going to cost a lot of money for the same product and services, and it's going to increase the cost of doing business. Increased regulations, they always add more cost. I have seen this in the healthcare industry. Every time Medicare comes up with a new regulation, it is costing hospitals millions and millions of dollars to meet those regulations. On top of that, you add the corporate taxes, which are being increased, along with increased interest rate that has hit the tech sector so badly in the last 3 weeks. What is the bottom line? The bottom line is the corporates are going to incur increased interest rate, increased cost of goods production, and less sales, leading to less corporate earnings. This is written on the wall. Let's look at some other factors. This increased cash flow of $1.9 trillion, most people are speculating maybe going into increased spending, into increased stock market, increased spending in the stock market. But increased spending invariably changes the supply-demand ratio. When people have more money to spend, they go and spend. When people are ready to spend, the cost of goods and products go up, which signals inflation, which the Fed and FOMC are already concerned about it. They are willing to accept 2% inflation, but when people have a lot of money, they're going to go and spend. And when there is demand, there's going to be an increase in cost, which can lead to inflation. So that's another thing that can cause. And all these regulations and trying to shut down the oil industry is going to cost millions and millions of jobs. We have already seen the increase in gas prices jump all of a sudden. And we also have a real estate bubble. I don't know if you have seen, I was trying to look for a house. The house prices are like $160 to $200 per square foot. Actually, they are not really worth. And I just read in Market Watch, the lumber futures have gone up by 49% in the last 3 weeks. What does that all tell you? We are seeing inflation creeping up even without knowing. We already saw the treasury bills go from 0.5 to 1.62%. So what am I trying to tell you? We have a significant momentum in something that is going to increase the interest rate, increase the cost of labor, increase the cost of doing business, reduce sales, reduce profits, and all of which will lead to the things that the Elliott wave people are predicting. So sort of bring the whole thing together. We saw 40% correction, the corona crash, but since then the markets have made new high. That could be the final leg of this cycle of bull market. We may be due for a pullback to retest the March 2020 lows that we saw. The changes that we saw from March 2020 to the present time has been explained in many different ways as an impulsive wave consisting of wave 1, 2, 3, 4, 5. Some call it as the diametric triangle, as Glenn Neely calls it, or an expanding triangle, or an extended triangle leading on to a terminal expanding triangle. Whatever the explanation may be, we are in for a big surprise. So I would be more cautious as we go into the summer and look at the earnings. That will give you an idea, and also pay attention to interest rate, inflation, and labor costs. Those are the things. And when things are not going right, and here is the final chart, which is from NeoWaves, from Glenn Neely. As I said, he has done more correct predictions in the last 30 years than any other Elliott wave expert. And here's where we are, and his prediction is that we may be seeing an expanding triangle terminating this mega correction we saw since 1999 or 2000. So these are some of the final waves. So what do you think? What is your prediction? How are you prepared if the market were to crash, just like the Nasdaq did in the last 3 weeks before it recovered part of it? How would you protect yourself? Think about it. I'm concerned about protecting my own assets, because I don't want to see another 40% drop in my market price of my savings. I don't know how long it's going to take to recover if we are going to go through that expanding triangle whiplash. Please leave your comments. We will bring you more interesting and thought-provoking presentations on stock market and how we can preserve our cash and make some profits along the way. Thank you so much.